Hello guys, welcome back to my channel. This is kingsfx trader here, and today I'm super excited bringing out this video. Yeah, this video is going to change a lot of lives. Just wait for it guys. Wait for it. It's going to change lives. So if you are new here, please consider subscribing to my channel. Okay, this is my channel right here. You can see here I draw forex trading videos, strategies on forex trading, uh, forex trading guys, and in fact everything you need to know about forex trading. Please subscribe to this channel if you are new. For my old subscribers and my traders, you know how we do it. Start giving this video a thumbs up already, because today I'm going to be exposing many things. Okay, so both on currency pair. So if you are a currency pair trader, I'm going to start with you guys from in the same video. I'm going to cover both currency pairs and indices. Okay, so if you trade currency pairs, this video is for you. I know you guys have been waiting for this video, those who trade currency pairs. And for my indices trader, yeah, wait for it. This video is mind blowing. Let me just go dive into the video. You can join my Telegram group. The link is in the description of this video. If you want to learn forex trading from scratch also, the my number is there. You can chat me up on WhatsApp, Telegram, anywhere at all. Guys, let's dive into this video. And the content, our what we'll be covering on in this video, we are going to be looking at trend analysis. We are going to be analyzing the trend. We are going to, I told you before in my videos that trend is the king. Once trading is consigned, trend is the king. So if you're a trader here and you don't even know what is trend, or you don't know how to leverage this opportunity trend have been giving people, you don't know how to trade a trending market, or you trade against the trend, I'm very sorry for you. You must trade with the trend. You must follow the trend. You must serve the trend. You must make trend your friend. You must understand the trend. And we are going to be taking it one after the other. First of all, you're going to identify, know how to identify the trend. Okay, the second one, you need to know what determines the trend. What is it that determines the direction of the price? When you get to know this, then you discover, you become more profitable, you improve as a trader. Then I'm going to help beginners with indicators that help you identify the trend. All right, you might not actually, maybe you're a beginner, you don't know how to draw your trend lines and all that. You can actually start with putting in some indicators that will help you. Once you look at them, you know where the market is trending to. Okay, so the fourth thing we are going to be doing here, we are going to be seeing the 4 stages of trend. Yeah, most of you have not seen this before. I told you I'm going to be exposing many things in this video. All right, so the next thing is you are going to see entry point and exit point when you're on a trading market. Every trader wants to enter a trade the right way, the right time, and every trader is looking for a trading market. Nobody is happy trading a ranging market. Some people like trading ranging market, but for me, if you are looking for those big moves, that should be on a trending market, not a ranging market. Okay, so now the last but not the least is I'm going to also show you the 2 things that determines your profitability as a forex trader. So if you want to see all these things packaged in just one video, please start liking this video already, because this video is going to change a lot of lives. You know how kingsfx do it. All right, so we are going to dive into it immediately. So the first thing here is trend. What is trend? Trend is basically direction. Okay, when you talk about trend, we are talking about direction, where the price is going to. Okay, that is in fact the basic thing about trend. Now the thing is, how do we identify the trend? What is the movement? How do we know that the price is either trending up or trending down? Already you know that the price, the market structure, we have about 3 structure, which is the uptrend, the downtrend, and the ranging market. Okay, the uptrend means that the price is going up. Okay, that the price is going up. Remember, you should not be expecting the price to just go up this way. Okay, you should not be expecting the price to go up this way. The price will be making a kind of movement. Okay, as the price is going up, you will be seeing this kind of impulsive move, pullback, impulsive move, pullback, impulsive move, pullback. All right, so you don't expect the price to just move up straight. There must be kind of impulsive move pullbacks as the price keep moving up. Okay, so you need to understand this. You need to understand this while trading, please. So the price is not going to just move up straight. The price is going to be making some movements, impulsive move and pullbacks as the price keep moving up. All right. So now, if you look at this point, let's start with trending market. Okay. Now, if you look at the price right now, the current price, we are having this impulsive move, pullbacks, impulsive move, pullback, impulsive move, pullback, impulsive move, pullback, impulsive move, pullback. So as you are looking at this, you should know that this price is actually going up. All right. This is what we call, you can use a swing point or pivot point. This is our first pivot, a kind of pivot point number one or swing point. Okay. You might call it higher high. Okay. You can call it higher high. This one here, higher low. Okay. The next one, another higher high. It simply means that this high is higher than this. This pivot point here is higher than the previous one. That means the price is actually going up. All right. You have this higher low. Okay. So when you see this, you saw that this particular point here is higher than the previous one. So this current higher low here is higher than the previous one. Okay, that means the price is going up. So you can now get a line which is known as trend line to connect two or more higher highs. So if I should get a line and draw this way, connect this and this, okay, this is two or more. All right, so this is called a trend line. Remember, I'm just using my free hand to draw. You have to get a line to draw this. So when this line was able to connect this and this, and you extend it, all right, that is when we are talking about a trend line. Okay, so once you draw your trend, and the same thing here, if this line we connect two or more higher high, sorry, this is too bad. This is too bad. I'm using my free hand, but that's bad. That's too bad. Okay, so if this should connect two or more swing points or pivot points, these two lines are known as a trend line. Okay, once you look at this price right now, you can see that this price is currently on a clear uptrend. All right, so this is how to identify the trend. Don't expect the trend to make this kind of movement here straight. No, there must be a kind of impulsive move pullback. The price have to rest. As the price make that impulsive move, the price will rest a bit before it continues. All right, this is exactly how to identify the trend. So the current trend of this price, USD Canadian dollar, is a clear uptrend right now. Okay, so this is how you identify the trend. So the opposite is a downtrend. Okay, the opposite is a downtrend. So if you should scroll back a bit, we have a downtrend here. All right, so if you scroll back, you can see this is a downtrend right here. So this price have been making the next another movement. Okay, it's a different movement here. So if I should get this, you can see that the price have been making this impulsive move, pullback, kind of pullback here, impulsive move down. You can still see that. You can take that as a pullback, but you just have to cover. Okay, this is another impulsive move there, pullback, impulsive move, pullback. Okay, when you see the price making a this place, now you have a low, high, low, low. Okay, low, high, low, low. Okay, you see the price have changed from a higher high, higher lows to a low high, low low. Okay, you can see that this is higher than this. So this one here is lower than the previous low, the previous high. All right, this high here is lower than the previous high. This low here is higher than the previous low here. So this particular one at this point, okay, is lower than this previous low, which is showing that the price is dropping downward. You can still draw your trend line by picking a straight line. Okay, you can pick a trend line here, put it right here to extend it this way, okay, downward. So let me just increase this a bit so that you will see. So you can see this line was able to connect this pivot point here, this one, also this one, and this one. All right, so this is a trend line here, a line that connects two or more lower highs, two or more, that is not one, two, you can count this as three, or this is also a kind of pullback right there. Okay, so but let's say two, you can see two or more this thing, lower high is a trend line, that is a down trend line. The same thing if you should pick a line here again to connect this. Okay, we still have our trend line also, because this is another point here that I missed. Okay, this is a point right here, this is also a point right here. Okay, so here we should still have our low low, and we should have our low high at this point. So this line connects 1, 2, 3, 4, 5. So this is known as a trend line. All right, the current trend now is a downtrend because the price is actually moving down. The price is moving down, so you are not, I've said it before, you are not going to be expecting the price to just make this movement downward straight. No, the price will be making impulsive moves and pullbacks. Okay, you see the price move this way, get to this line, pull back, you know, keep making this movement. Sometimes you will see something like false breakout, pull back a bit, keep making this movement. Okay, so this is basically how to identify the trend. Okay, once you look at your chart and the price is moving down, creating a kind of this kind of movement, the low 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 high, low 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 high, you know that the price is going down. Okay, or once you identify that the price, this swing point, the previous swing point is always higher than the current one, it means that the price is moving down. This pivot point here is higher than this, this is higher than this one is higher than this, so the points keep going down. So once you discover that the pivot point or the swing point keep moving down, that means the price is going down. The reverse is the case. The reverse is the case when you see the swing point making this kind of movement. You see this higher high is lower than this. So the current high is greater, or the high is higher than the previous ones. You can see this is higher than this. This one is higher than this. So that means the price is actually going up. Okay, this is how you identify the trend of the market. Okay, then the next thing is ranging market. Okay, how do you know that the market is ranging? Okay, when the price is ranging, it means that the price is actually going sideways. The price is not actually going up or down. The price is going sideways at a particular point. So I am not expecting you as a beginner to start trading a ranging market. You're not going to get any big move on a ranging market, and sometimes you will waste a lot of time trying to enter and exit, and you end up losing a lot. Even when the breakout will come, you won't even know, because by then your stop loss could have been a kind of hit, or you have your take profit, any of them. So it depends on your entry. So a trading market is simply this: when the price is ranging between 2 points, you can see from here the price entered this between this resistance here, the up one, which is like a ceiling, is the resistance. The down one here is a support. Okay, we call this a resistance, we call this one support. Okay, so when the price gets into these two lines, you see the price start ranging between those lines. Okay, the price was not able to break between those lines for a long period of time. You can see this is 4 hours time frame. So the price ranged, keep ranging or moving sideways between these two lines. Okay, between these two lines, you can say this is line 1 and this one is line 2. Okay, so the price keep ranging between those two lines. That is exactly what is known as a ranging market. When the price is going sideways, it means that the price is ranging. The price is not actually going up or going down. So you should stay away from this kind of trade. You should stay away once you discover this. That is one important thing about knowing the trend. When you discover a trend, if you discover that the price is trending up, you should be looking for opportunity to buy, right? So if you discover that the price is trending down, you look for opportunity to sell. What of when you see the price ranging? As a beginner, you should not trade. You should just leave the trade for the kind of pay attention to the trade and wait for a breakout. And that brings me to the next point, which is a breakout. A breakout is simply the point after a ranging market, after the price have ranged for a very long period of time or a short period, depending on how long the price ranged at particular point or region. After the ranging, you see this movement here when the price, left that region. Look at the region the price has been ranging between these two lines. You can see the price left the region and break above this point. You can see this. So this, at this point, is known as a breakout. That the price have broken out from the resistance point. So it could have been on support anywhere, whether up or down. Breakout is breakout. So this one breaks above, which is it breaks out of the resistance. Okay, which means that we are going to be having an uptrend. But for the fact the price break out of this resistance never means that the price, this is a confirmed uptrend. You need to wait to confirm it, because sometimes it might break out and you see this pullback again, continue ranging, or even pull back and break out through the support and go kind of keep going down. All right, so you need to wait to confirm the breakout. So after breakout, the next point you are going to get is this called retesting. So the price have to come back to retest the support. All right, now the resistance. Now the price have to come back after breaking out of the resistance. The price will come back to retest the resistance. Now change the resistance, this line right here. Okay, this is our blue line here. It will now change the resistance to support right here. After retesting, the resistance changes to support. It now takes that resistance point as a support to push, to make that next impulsive move. Okay, so you have a ranging market. After a ranging market, there will be a breakout, and that's the point you'll be waiting for to trade, to enter your trade. Okay, as a smart trader, you don't want to keep wasting time here taking some pips. You need that impulsive move, you need that massive movement. That is where you'll be making a lot of money. Okay, now once the price breakouts, okay, you wait for the price to retest. Most time the price might not retest, okay, but you need to see sign that the price, this is an impulsive move before you enter, so that you won't enter and this maybe it might be a first breakout, and when you enter the price drops and you lose money. So it's better you wait for a retest or a pullback before you enter a buy on this kind of trade. Okay, so this is basically how to identify the trade, which is our first and second this topic for this class. Okay, I believe this stuff now is simple to you. If you look at any price, you'll be able to know that this price is actually going up or going down. This is an uptrend. You can see it clearly that the price is going up. All right, then if you check the previous behavior, you see that the price have been going down before, and after that the price needs to gather momentum, which is this ranging. At this point the price is gathering strength to make either a movement upward or downward. Okay, after this ranging, the price break out of this resistance, okay, and retest back to the resistance, changes to support and move up, start moving up. Okay, I believe this is very clear. I believe this is very clear, guys. So if you have any question on identifying trend, if you have any issue identifying trend, drop the comment below. I believe this video is a kind of very clear to you, but if you still have any problem about this, drop the comment. If you miss creating a video like this, I'm going to create a video like this again to guide you. So the next thing we are going to be talking about is trend indicators, some indicators we should add up, okay, in order to help us identify the trend. Okay, so now I've added up the indicator. Just turn it off. Okay, so I'm just going to be using just moving averages. Okay, we are going to be using the 10 moving average, that is exponential moving average. You know how to add those things. You can start look at the indicator section. You can go there, search for exponential moving average or moving average exponential, anyone. You can see it here, moving average exponential. So you can search for it. That is the first one. Okay, first one is period 10. Okay, if you check the settings, you see that the length there is 10. All right, so once you impute 10, you are done. All right, the next one is moving average 20. Okay, this one now is, the first one is exponential moving average, the second one is simple moving average. Okay, you can just go to the indicator and type MA and you have it. This is NA, sorry. You type in MA and you have this moving average here. Okay, then you add it, change the length to 20. So now the next moving average is moving average 50, the same simple moving average. Okay, moving average. So we have exponential moving average 10, we have simple moving average 20 and 50. All right, so the 50 is here. If you look at the width there or the size, you discover that the 50 is bigger, the 20 is the next, and the smallest one here is the exponential moving average 10. Okay, so once you put this thing, once you discover that the 50 moving average is under or below the chart, you can see the chart right here, and this is below the chart. Okay, once you see the 50 moving average below the chart, 20 moving average below the chart, then you just know that this is an uptrend. Okay, you can see from here, even from when the market is still ranging, is a sign, okay, where the price is going to break out from. You can see even here when the market is ranging, you can see the 50 moving average have already moved from here to downward. Okay, which is showing you this is a signal that the price is going to be breaking above. All right, then you see this line here, you see the line it kind of remains below the chart. All right, that point. Okay, so as you can see, this 50 moving average remains below the chart. Okay, once the 50 moving average and 20 moving average are below the chart, the candlesticks, okay, that's the trend remains an uptrend. Okay, so your condition as a trader now may be that, okay, once my 50 moving average is below the chart or below the candlestick, I will be buying this market. I will keep buying. All right, I will keep buying until the price breaks below my 50 moving average and that's my 20 first, then my 50, before I close my trade. That might be your condition. Simple. Once the price is above the 50 moving average, once the chart above the 50 moving average, I will keep buying USD Canadian dollar. Okay, I'll keep buying this. I will keep buying this pair. And for instance, if you enter this trade at this point, you keep enjoying this trade. You keep enjoying this trade till this point. Even here after this pullback, you know that it was not able to break the 20. The 50. It was able to break the 20 here, but see the 50 is still below. So once your 50 moving average is not the price not break it downward, okay, you keep buying. This might be your condition. This is how you can use just this information to trade. So it seems like this chart, let me scroll back, okay, where I did not have any drawing that you guys can see clearly. Just this thing keep happening, guys. Anywhere you can see here, even though it's very short, but when you see the cross, all the moving averages are below this, are below our chart or our price or the candlesticks, we buy. All right, once you see them below, you buy. If they are above, you sell. Once the 50 is above, you are selling. You can see this is not a kind of not a good movement. All right, so you need to picture a trending market like this. Okay. All right, guys, so this kind of basic information that this our indicators kind of will show us. Once you see a clear downtrend or uptrend, like this, you can see what happened here. Once this look at the kind of market you are looking for as a trader. You are not looking for a choppy market or a ranging market where you don't actually know the kind of the clear movement of the price. Okay, here you can see is a downtrend, and as long as this 50 moving average and 20 is above the chart, we keep selling. So we keep selling from here, moving down. Okay, at this point we keep selling. Look at where we could have a kind of we could have left here. Look at the point we should close our trade. At this point, the price a kind of breakout of that our trend line above, which means the trend line is now below and the price starts ranging. So we could have closed our trade right here. So can you see the how profitable you can trade with just a trend line, as in just moving averages? Okay, you can see we entered here and we keep riding the trade. Okay, now this brings me to my next point. Okay, this thing actually happens maybe 4 out of 10 trades. It sounds funny, right? 4 out of 10 trades. So if you are just trading with these moving averages, so if you trade 10 times, it means that this thing is going to work out 4 out of the 10. So what it means is that your profitability now depends on how you manage your risk. Okay, how you manage your risk. I will discuss this. I'm going to discuss this on our kind of the final, which is the two things that is the last topic I will be discussing with you guys in this class. Okay, so I won't kind of go in detail, but just know that this, when you have 10 trades and this thing works 4 times, because you might be asking yourself, what if let me see an example of what I want to say. Okay, let's say you are here and the price, all the indicators are down. Now you have to buy, right? What if you have bought here at this point? Okay, because the moving average 50 is here down, this one is down, so you bought, and this price just make this movement, pull back a bit, take away your profits, move again, give you small profits, pull back a bit, and before you know it, you're already losing. Okay, so the main important thing here is that it will work 4 times, and 6 times you cut your losses. The 6th time it is not going to work, you cut your losses. At this point you have to close this trade. It's not working out. Okay, look at where you will recover all you have lost. For instance, even though if you lost the whole 6 times straight, all right, at this point it's working now. All right, you are going to recover. This movement is going to recover all your losses. Can you see from here? You enter the trade and the price have been up. You keep riding this trade down to this point. So this movement have recovered that little losses or you have been getting from this kind of market. All right, from this kind of market, because probably if you enter this point, you are going to be closing this trade in loss, because at this point you entered here and the price is at this point. This is the place you should close your trade in loss. So look at the little movement here. That's the losses you'll be taking. So at this point, maybe you sold here. Okay, you are going to be closing this trade in profit. All right, I want you to pay attention to this. You're going to be closing because you sold at this point when all the indicators are up. So you are closing this trade when this price breaks above this our moving average 50. Okay, you close here, so you can see the point that you actually made some profit here. So I'm just trying to show you how these things work. All right, at this point you have the moving average, all of them are up. So if assuming you sold at this point, okay, you push down to this point and the price pull back a bit and breaks our 50 moving average, we could have closed here with little loss. Can you see the difference? Can you see whenever you are closing with losses, it's very little, as in it's not going to be much losses, but when you will be in profit, it's always massive. That means even though you lose 6 times or even 7 times and you take profit 3 times, you will recover all your losses and be in massive profit. That is how interesting risk management is. When you allow your profitable trade to run for a long period of time and closes your losses on time. That's risk management. Okay, don't think that each time you place a trade you are going to be in profit. It's not going to be possible. You are going to lose trade, but just allow your profitable trade to run for a long period of time to recover all the losses. Only one trade can recover 6 or 7 losses you had for the day. But with a good analysis, you should not be losing more than 5 times when you are trading 10 times. You shouldn't. But even though if you lose more than that, you are still in massive profit. That's what I want to let you know with a proper risk management. Guys, let me dive to the fourth thing we are to discuss in this, which is 4 stages of trend. All right. So I have to move from currency pairs. Okay, I have to move from currency pairs to indices. This thing is also applicable in currency. Everything is the same thing. The same thing we are doing here, you can do it on indices. I just decided to combine both indices and currency pairs on this. Okay, when you go back to this point, okay, when you go back to this place, this is a volatility 25. Okay, 25 index. So I'm going to show you the 4 stages of trend. Okay, so the number 1 stage is consolidation, which you might call a ranging market, where the price starts consolidating between 2 lines, which is resistance and support. The candlestick starts consolidating at a point, coming together. Okay, you can see here, this is the consolidation. Stage 1 is consolidation. The psychology behind this is that the price is at a point gathering energy or momentum to make a movement, either upward or downward. All right, the price is resting, trying to gather momentum to make a movement. Okay, that is when the price is consolidating. So as a smart trader, you always pay attention to this point. You pay attention when price is consolidating. Okay, once price is consolidating, you pay attention. Or once price is ranging, you pay attention to that point, because you need it. That is where you'll be getting those massive or impulsive movements. Okay, so the first stage is consolidation. Then after consolidation, the next thing is breakout. After the price have consolidated between 2 regions, which is support and resistance, the price is going to break out above or below. In this case, the price breaks above. All right, so this, you can see the price from here between this line have broken this resistance above. You can see it. You can see the price right now. So the price have broken out from the resistance. That is a breakout point. All right, this is a breakout point. So after the breakout, which is number 2 stage, so number 3 stage is continuation, trend continuation, when the trend continues. All right, that is when the trend continues, making the higher highs if it's an uptrend and higher lows, downtrend a lower lows and lower highs. Okay, so currently on this price, this is volatility 25. This is an uptrend right now. So the price after consolidation, the next stage is breakout. Then after breakout, the 3rd stage is continuation, when the price continues. This is where you enjoy trading. Continuation, when you see that the price have successfully have broken the resistance or support, then the price will now make an impulsive move that will trigger many people to enter the trade. All right, so after that, the price continues to move up. That is the continuation. Okay, then after continuation, the last is the exhaustion, when the price is now, when the movement, the buyers are already tired. Some people have left here, this little pullback, some people will just close their trade at this point and the buyers will drop. Okay, when they make this movement, you can see some people have a kind of start leaving the trade from here, from this quick rejection and everything. You can see some people have left. Okay, when they close their trade, the price drops and the momentum reduced, drastically reduced, and you can see that the price move up a bit but could not break the previous high, which is trying to tell you that we exhausted. The buyers are telling you we exhausted. You have to close your trade right now. Okay, you can see this movement from here down. Then it should make an impulsive move to break the previous high, but it could not. That means this is when the buyers are tired. They can't get tired. Okay, so after this is the fourth stage of a trend. Okay, remember the first is consolidation. Okay, after the consolidation, the next thing is breakout. Then we have continuation and exhaustion. Okay, so these are four stages of a trend. Now you might be asking, what information are we getting, or this particular stage is passing? If you understand this, you will understand your entering point. You understand the time you enter a trade and the time you exit. This is the information they are passing. Now, in fact, this is everything you need to know about trading. Let me tell you the truth. When the price is consolidating, the price is calling you in. Come and look at this chart. Come and pay attention to this particular currency pair or indices. Look at volatility 25 right now. The price is consolidating. Pay attention to this. Something might happen. It's showing that there will be a big movement. There will be a massive movement. Then, as a smart trader, you come and pay attention. Draw your resistance, draw your support, and wait for a breakout. Now, when the price breaks out, it's now calling you in. It's time to enter this trade. Now, the price has successfully broken out from a resistance or a support, and in this case, a resistance. Now you enter the trade to ride the uptrend, and all your indicators, which is indicator 10, 20, 50, all of them are below the chart, which is an uptrend. This is a second signal. So when you combine this information with these indicators, you will see how profitable, or how a kind of you improve in your trade. You will see how profitable you will become trading using just this information I'm passing through. Just understanding the trend. This is what is called trend analysis. I decided to break this thing down so that you understand. Even though if you are just watching my video for the first time, or you are watching video about trend for the first time, you get to understand this, the in-depth knowledge in trend. All right. So after this breakout, then you enter a trade. All right. Then when you see the pullback was not able to even come close to the previous low. You are seeing that this price will continue moving up. That is the continuation. Then at this point, after this high, the pullback here, good and fine. This is a signal to you need to continue holding your buy. But you can see this movement up here was not able to break the previous high at this point, which is showing you that we are exhausted. Buyers are exhausted. People are taking profit. Buyers are reducing. Okay, that means the price will be dropping. So from here you can see that buyers are exhausted and they are leaving the trade. Okay, once they are leaving, the price start dropping, guys, and change to a downtrend, and all our indicators move to the opposite direction, which is up, showing a downtrend. This is simple. So with this analysis now, you will know when to wait, when to enter, when you continue, and when you will leave. All right, this is very simple. Now, when you have this kind of trend, this is a downtrend. The question is, where should I enter? Remember, I mentioned it here. You should enter after a breakout, and you check down and discover that all the indicators are below. You buy. The next thing, if you are selling, the same thing applicable. But in this case, you have to wait. If there is no, as you can see, there's no kind of, the market did not range a bit. It's just a swing point and the price changes to a downtrend. Okay. Now, the place you enter this trade is the first entry is at this point. All our lines are above the chart. All right. The price have dropped and pulled back a bit and was not able to break the previous high, which is showing that the trend have changed. And you enter the first entry is this. So maybe you are not online, or you are afraid, and you have this impulsive movement down, and there's a pullback again, and our 50 moving average is still up. This is your entry 2. Maybe you still miss this entry 2. There is an impulsive move, and there's a pullback. Our 50 is still above. Entry number 3. Guys, this is how you trade comfortably. This is how you trade. In fact, after this kind of analysis, you enter a trade comfortably and you enjoy trading. So I hope once anybody talk about trending markets, you should come out or stand up to teach them how to analyze the trend, how to enter and how to exit. You exit the trade once the price breaks the 50 moving average above, you exit. So at this point is your exit point. Guys, this is where you leave this trade. Once the price breaks our 50 moving average, we leave. So remember, if you assuming you enter this at the entry number 1, look at how many pips you'll be making. If you enter 2, the same thing. 3, the same thing. Even 4, the same thing. All right. So this is how interesting trading a trending market is. When you see a trending market, when you observe market trending, please guys, this is one of the best market structure to trade. Whether it's an uptrend or a downtrend, you can enjoy this. So if you like this video, guys, please I'm begging you, give this video a thumbs up. You can't just be watching this and you can't just click a button, just a button. I don't say you should pay me any amount of money for doing this. I've decided to do this. I've decided to post this on my channel. And I'm just begging you to click that like button, please, for me. Okay, so guys, using this analysis alone, you already know your entry point, you know your exit point, even on a trending market like this. And after you had a kind of a ranging market or a breakout, you still know your entry point. After the breakout, you enter and write the trend continuation. Then you know your exit point at this point when you discover that after this pullback, the next movement was not able to break the previous high, which is showing you that the buyers are exhausted already, or they are tired, or they are going out of the market. They are already closing their trade at this point. This is what what is showing right now at that point. So you should close your trade at this point and wait. When the moving average crosses above the chart, you enter a sell at this point, which is this one. Should be the entry number 1 and 2 and 3 down. So basically, guys, I was able to show you the trend, how to identify the trend, what determines the trend, some indicators you need. Okay, some indicators you need, which is these 3 moving averages. If you don't know how to, maybe looking at these swing highs and pivot, this thing I showed you about the pivot points, swing high, blah 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 blah. If you don't understand them, you can actually just use this moving average. You can add up your moving average, your 10, 20, 50 moving average. Once the moving averages are below the chart or the price or the candlesticks, then you will be buying. Once they are above, you are expected to be selling. Okay, so the last but not the least is basically the 2 things. Okay, the 2 basic things that determines your profitability as a trader. All right, remember I wanted to show you before. Okay, I wanted to show you before using that our currency pairs, the first trade. I said I'm going to talk about it later on this video. Now, what bring about your profitability trading the forex market? The first thing first. Okay, we are talking about taking a high probability trade. Okay, you need to take high probability trades. You don't just enter a trade because you feel like you need to trade, or because it's already night, or it's already night and you have not traded for the day, and you say, I can't just miss a whole day without trading, or I can't just miss a whole week without trading, or a whole month without trading. You must identify a high probability trade before you press that buy or sell button. Remember, all your trade, you analyze the trade and you believe this trade is going to go my way. But I bet you that not all of them will go your way. Some of them is going to go against you. You're going to be losing money out of that trade, even after your analysis. So that's why it's important for you to take only high probability. So combining different factors. Right now, you might be just trading. Okay, once you see a breakout, you enter a trade, and after the breakout, then it might be a false breakout, and the trade go against you, and you lose money. That means you're just taking. This is not a kind of high probability trading. You're just using one factor, which is breakout. Why not use this? For instance, let's go to this point. Why not use, okay, the first factor is that there might, if I'm trading when after a ranging market, once the price breaks out, that is my number one factor of buying this particular currency pair. All right, number one factor. Then the second factor is that I must see a retest or a pullback to this line, to my resistance, changing my resistance to a support. This is number two factor. Then number three is that I need to see my moving averages below the chart. This is number four. Okay. The number five now is that I want to see a candlestick pattern that formed. And if you look at that point, guys, this is what is called a high probability trading, guys, at this point. If you look at that point, you have a hammer, which is a bullish candlestick pattern formed at that point. You see four factors that is a kind of that is telling you the same thing, showing you to buy this trade. Number one, you see you discover the breakout. After the breakout, you wait for a retest. The price retests that particular point, the resistance, and change it to support right now. So after the support, you check your indicators. The indicator 50, moving average 50, you can see is below the chart. This is number three factor. Then number four, you are seeing a hammer, which is a bullish pin back candlestick pattern forming. Four factors telling you to buy this trade. This is a high probability trading, guys. This is when you buy a trade and you be comfortable. You just feel relaxed looking at your trade as the trade goes your way. All right. So this is the simple truth that you need to know. This is number one thing that will make you a profitable trader consistently. When you take only high probability trades, you must see 2, 3, 4, or 5 factors telling you to click that buy button or saying you should click that sell button at a particular time. So you must understand this. For the fact you discover the breakout never means that the price is going to go out or go up or down. For the fact you see the whole trend line below this might not be a criteria that the price will keep going up. So you must combine different factors, see the information they are passing across, like this thing I showed you here. I've shown you. You discover the breakout, there is a retest, and there was a candlestick pattern formed, which is a bullish candlestick pattern, and our indicators are below the chart. Then we buy. These are four things telling us to do the same thing. This is when your profitability here in trading will keep, improving by day. Now the second thing is your risk management. Okay, how you manage your risk. You must understand this concept of leaving your winners to run and closing your losses. So if you are losing a trade, you should close on time. If you are on a good trade, you should enjoy. Don't close your trade. Some people close good trade early and allow the bad ones to run. This is when you crash your account. This is when you blow your account. You must understand this. Now that's why I love this indicator so much. That when you enter this kind of trade, the price are broken up. It is above the chart. The indicators are below the chart, and the price is above all the indicators. And you bought here. Assuming you bought at this point, and the price move up, come down a bit, and at this point the price will break our moving average 50. You close your trade. Do you see how interesting this moving average will help you trade your entry and exit point? Now you entered, and you think maybe when you discovered that, you were very happy that you are right. Good. All the indicators are below. Now I'm going to buy, and you buy. The price starts going up, and you are happy. Now the price retraces back. Make a movement again, pull back, and trigger your stop loss. This is where your stop loss should be. This is where you are going to be a kind of going out of this trade. So if you cut this loss here, you discover that the losses the losses you incurred here is very small, very very small. All right, but look at the profit here. When all the moving averages are above, you enter your trade and you keep holding the trade until it breaks moving average 50 above. Before, look at the point you should be closing your trade. So you see the movement, how many pips you're able to make. These pips, it has to take you up to 7 trade losing trade for you to take away this profit. This particular movement can give you, let me say it might give you 150 bucks. All right, then this one you took here might be just 5 bucks. You are still in profit. You need to trade 10 to 15 times before you lose, you're able to blow this account. So this is how you'll be able to a kind of remain a consistent profitable trader. Remain consistent when you are trading. Not grow your account today, you blow it up tomorrow. The problem is that you are cutting your profitability. You are cutting your profitable trades. You are closing early and you are allowing your losses to run for a long period of time. All right, so this is just the secret. Remember, in this video I was able to show you the trend. Then this number 2, guys, I was not able to talk about it well. All right, I'm going to that should be my last topic for this class. Okay, now we have already seen our trend indicators. We have already learned the 4 stages of trend. We know our entry and our exit point, and what I just discussed now about the 2 things that determines your profitability in forex market. I've already shown you that. The last but not the least is what determines the trend. What is it that determines the trend, guys? And that will be, after that we are going to be ending this video. All right, so the first thing is the thing that determines the trend, the direction of the market, are the buyers and sellers, the traders. Okay, the traders. I don't want you to start thinking about news events and all that. Let me tell you something. Whether news events on whether there's news event or no news event, any of them, what determines the direction of the price, whether the price is going up or down, is the number of people clicking that buy button or sell button. The news have nothing to do in the, I will prove it to you. The news have no impact on the direction of the market. Yeah, most of you will be shocked. Why are you saying this? After all this beautiful class or the whole information you have passed, why are you spoiling it with this information? Nah, no, I'm not spoiling. I will prove it to you. Now, maybe there's news. You are trading currencies, and there is bad news, or maybe good news. Let me tell you, the good news will only trigger people to go and click that buy button, or the bad news will trigger people to click that sell button. So what matters is the number of people buying a currency pair at a particular time to number of people selling. Okay, now let's say we have 50 buyers here and we have 50 selling. When you have this kind of people, number of traders, let's say we assume we have 100 traders right now buying maybe USD Canadian dollar, or buying boom or crash or volatility, any of them. If you have equal number of sellers and buyers, that's when you see the price ranging between 2 points, between a resistance and a support. The price will be ranging because the buyers and sellers are equal. All right, they are equal or very close to each other. That's when the price will be ranging. Okay, so the number of people buying a particular commodity or pair determines the movement. Now let's see this. Okay, remember this 50 and this is 50, and they were able to balance this price horizontally. You can see it. Okay, now look at this. Can you see buyers? We have 80 buyers now and we have 20 sellers. What do you expect? If you have about 20 objects, let me use let's say oranges. Let me use orange. So sorry, but I have to use this. Maybe you have 20 oranges in this basket, and you have 80 oranges in this basket, and you have 20. You already know what will happen. There will be weight here. These buyers are going to pull this price up. and the price will start making higher highs and higher lows. So the number of buyers here is, you can see they are greater than the sellers, and that's why the price is pushing up, guys. That's why the price is pushing up. Okay, the number of buyers are greater than the sellers, and the price is going to go up. There's no two ways about it. I know that news, events or anything at all actually affects in fact, maybe the news caused most people to buy. But what I'm trying to tell you is that the actual thing that pushed the price up is the number of people buying. So as a trader, as a smart trader, you're always looking for where the population are. This is not when they will tell you that you should be unique, you should do your own. No, in trading, you must follow the crowd. Where the crowd are, you go. Where they are is where you should be. So if the number of buyers are here, they are buying because they have heard a positive news about a pair, then they went and buy, right? But the whole thing is that the thing that is pushing this price is because the number of buyers increased because of the news. So the news is kind of plays a part here, but the main thing is the number. Okay, the main thing that push or move the price is number. All right. So if we go to the next slide, now we have 70 sellers and we have 30 buyers. Have you seen what happened? The sellers are going to push this price down. This is very simple. If you have 30 oranges here and you have 70 here, you should know that this image is very correct. That is, they are going to push this price this way, downward. All right, and you see the price making a lower lows, lower high, low low, low high, lower down, like that. So this is the kind of basic information you need to know. This is one of the things all my VIP traders, people who pass through my mentorship, they know all these things. They know the brain behind those movements. They know the psychology. They know everything about this price. Okay, so I decided to bring out this video for you to see that all these things, for everything you are doing or for everything the price is doing, there must be a reason behind that. So as a smart trader, you are always looking for those points or those places where buyers are or sellers are when you have population. Okay, once you have more people buying, you should be buying. If you have more people selling, you should be selling. And your question should be, how do I know? And what determines that is just the demand and supply area or region, okay, which you might mainly refer as support and resistance. Okay, so this brings me to the end of this class, guys. If you enjoyed this video, click on that like button, share this video. If you want to learn forex trading from scratch to advanced level, chat me up at kingsfx trade on Telegram, chat me up on WhatsApp. Also join my Telegram group. It's free, guys. You can join the Telegram group to enjoy more guides on forex trading. I hope you enjoyed this video. Yeah, I think you had a good time here. I will see you guys in my next video. Bye for now, guys.